30 minutes and 60 minutes. And after that, you have everything you need for the daily range to be defined. You can pick the high and the low of the day after the first 60 minutes. The first 30 minutes, based on how price is delivered, you can get the high or low of the day based on that. But there's certain quirky little things that I'm going to reveal that tell you when to use the first 30 minutes versus the first hour to get the daily high and low within 3 ticks. But you being able to do that on a steady diet of every day, that's not going to happen. There's going to be a lot of factors that we're going to see that, like today, there's certain things that you're going to be met with in terms of high probability versus low probability. High probability it's going to trade the mid gap. Yes. What happens if it wouldn't have done it today in the first 30 minutes, but did it at like 11 o'clock? Okay, you would say, okay, well, it did it again. It just didn't do it in the first 30 minutes. Wonderful. But it's not all that important because it's a high resistance liquidity day, meaning that it's going to be a lot of give and take back and forth. But it just so happens that hit today, even a high resistance conditions, it trades to mid gap. So 70% strike rate is still hitting banging just like that today, even in a complex delivery day like it is today. The bias trading to the easiest low hanging fruit objective for Caleb would be new week opening gap high, but he doesn't need that. Notice that? He doesn't need that. So back to his entry back here. He sees displacement off of a higher time frame array, which is the 1 minute SIBI. That's that pink box up here. Then he goes into the lower time frame and he waits and sees, does price respect it? Look at the bodies. Are they respecting it? Yes. Sends price where? Lower. And then he gets his gap. Price trades back up into it. He can enter into that gap. He has a little bit of heat here, but guess what? You're going to have trades where it's going to have heat. That means a little bit of drawdown. It doesn't stop you out. It shouldn't cause you to bail out of the trade. It just means that you got to go through a couple moments of uncomfortable price action. You have to weather that. Okay. So it has a little bit of heat in here. Remember, he's entering down here at the low of the gap. He's not allowed to do mid gap. He's not allowed to get the high of the gap. He's not allowed to use any mohawks, which would be entering on any wicks above that gap. He has to enter as it trades 1 tick below, and that's his entry. That would be here on that candlestick right there. That's his fill. So he sees initially what? His favor aiming for that low. Think about it. That's all he's looking for. It's in the direction of mid gap. It's in the direction of new week opening gap high, but because his skill set is so modest, it's next to nothing right now. How does he grow in his confidence? How does he stay motivated? Because it's real easy to be demotivated. It's real easy to talk yourself out of doing this and wanting to jump into a new system or a new guru or a new something. Distracting yourself from the obvious, which is you not doing what it's required to be consistent. You have to put effort into anything. Whoever's teaching you rather, if they're not telling you it's going to take effort on your part, they're lying to you. And when you discover that, you're going to feel stupid because you probably paid them money and they didn't teach you shit. Here I'm teaching you how to do this correctly. If it's good enough for my kids, I promise you it's good enough for you. So if he's aiming for this low for sell side, because it's in the direction from the entry on this fair value gap, aiming to get to below that low, he doesn't need the mid gap to be traded to. He doesn't need the new week opening gap high to be traded to make his money, to make his meal ticket for the day. But he has initial profits running for him, and they yank it from him all the way back up and above his entry, but not to his stop, which would be in that little red box above that candlestick's high. This is uncomfortable, but eventually it breaks that back down below it, and then he sees it come back here, trades back lower, back in here, and then finally hits mid gap. Should Caleb or should you feel depression about that because it hit where you thought it was going to go? No. Just because you exit once it starts to break down and it goes to your first low-hanging fruit objective, which would be below this low here, remember, it's about making money consistently and not losing more than you should. Focusing on a consistent routine, a protocol, a process that yields you a very easy low-hanging fruit objective, getting money, get it, go. It's very surgical strikes. It's hit and run trading. That's kind of like what I called it when I was on Merck, um, Internet Relay Chat back in the 90s when I was running and hosting a S&P channel. I had 1,000 people in the room, and it's only because that's all that it would allow. It wouldn't allow anything more than 1,000 people at the time when I was using it. So with that limitation, I had as many as I could in that room, and what I taught was hit and run strategies where we would go in, get 2.5 to 3 handles in the S&P, out the door, we're done. Simple as that. There was no long-winded ICT stuff like this video here. It was I want to get in, get out. I want to get in, get out, because I was nervous to be in front of people talking. I'm naturally an introvert. If we were talking like this in front of a group of people, I'd be far less likely to have a conversation like this because I'm just introverted. I like to be quiet. But because I'm in my office right now by myself, I'm talking to my children in my mind. I'm talking to them. So by having these surgical strikes, these hit and run trading opportunities where you're getting in at a logical level, framing risk at a logical level, and aiming for a very easy objective in the right direction. Guess what this affords him over time doing this? It will teach him how to hold on to the trade to get to half gap. It'll teach him to hold on to the trade to get to first threshold on the new week opening gaps or new day opening gaps, high on the shorts or lows on the longs.